Hey all, welcome back to the channel. Today we're going to dive into episode 4 of the full paycheck investing series. So in this episode, you'll see me invest 100% of my paycheck, my full paycheck, and pay bills from my brokerage account. So I'll really show the full flow and the full thinking between anything I buy, totally uninterrupted. So yeah, I'm filming this on October 15th, on Wednesday. But yeah, I'm posting this on the 18th due to the YouTube strike that happened Saturday. So yeah, I was banned for a week from posting, so I'll be able to post sometime Saturday afternoon again. But yeah, stay tuned until the end of the video to see what plans I'm doing to help secure against that. Yeah, we'll go into that at the end of the video. As far as video today, as usual, before we dive in, I'm just going to go over the monthly flow that I use to live out of my brokerage account and invest 100% of my paycheck. So how that practically works is that my paycheck deposits to Robinhood spending. I transfer that full amount, 10.8K, to my Robinhood taxable brokerage account. And that gets split into two buckets that I invest in. So every paycheck I invest into growth and dividend growth stocks. Like that right now, that side of the portfolio makes up about 55% of my portfolio. So the most of it. And that invests in things like QQQM, SCHD, and single stocks such as Apple, Microsoft, Costco. And yeah, any dividends that come in from that gets dripped and reinvested into them. So this is like, I consider like the growth engine of my portfolio. This is like stuff that I'll ideally never sell and just will always be compounding. The only time I'd maybe sell is to like rebalance between funds and things like that, but never selling to take money out. And then on the other side of the portfolio, 6.8K goes towards that. And that's for the income side, for the high yield income ETF. So that goes to stuff like XPay, YMAX, Ulti, some single stock stuff like Misty, Hui, and things like that. So roughly that gives me a 50% blended yield between all of those because of like how high those pay. And that's creating a snowballing monthly dividend. So that's like the 300 here is like to be TBD as far as like how much of a good estimate that is, but it's like growing. It's growing a lot per month. So anywhere, let's say between $100 to $300 a month, depending on how it goes. So those dividends kind of deposit directly to the account. That pays down the margin balance, kind of keep that in check, and the cycle kind of continues there. So the idea behind here is that like the portfolio, I never take money out of it as far as like selling assets and then pulling money out. What I do is I borrow against the assets, the full asset value of the portfolio. So right now my market value of my portfolio is somewhere like 265K. If you factor out the margin, it's like more like 131K. But yeah, I borrow against that at a 5% interest rate, which is like much lower than my current mortgage, which is 5.95%. And I use that money to pay all my expenses, essentially all my monthly expenses, all my bills, my mortgage, my phone bill, all that. So like roughly on average, my monthly expenses are about $9,000, and it's running a bit high lately, and actually need to kind of get that down a bit, probably closer to 7,000. But for this example, like, yeah, if $9,000 comes out, then I get $5,000 in dividends at deposit. So functionally $4,000 of my margin kind of gets added to every month. So the idea is that like by investing every paycheck into these high yield income ETFs, that's going to snowball my dividend and then eventually match and exceed that $9,000 I'm paying in monthly expenses. And then I'll be kind of on the road to FI there, right? So I'm going to rinse and repeat this until I'm 40, hopefully, and hopefully reach FI. So yeah, what's nice about this is that you saw the chart of this, and then now we'll be able to see this in practice through my full paycheck investing and paying my bills. So yeah, and then also if you want a more detailed thing of this, I have a separate video that dives deeper, and that's I'll put it on the top right. But yeah, as usual, yeah, disclaimer that like none of this is financial advice. I'm not a financial advisor. This is really just for entertainment purposes only. You have to do your own research with this kind of stuff, and the strategy I'm doing is very high risk given the margin that I'm using, so quite a bit. So yeah, proceed with caution. As far as the video today, let's just dive in. So yeah, if we dive into Robinhood here, so yeah, market started off a bit green today, which was nice, and it's kind of popped back down, which is making me regret less. I was almost going to invest on Friday, just early, like, and just use margin, and then just the paycheck today would have paid stuff down, but I would have probably invested around the same point as it is today, so kind of works out, because that's like around 10 a.m. or like 9 a.m. That's when I typically invest in the morning, so I wouldn't have been investing around this time. But yeah, let's check it out. So where we're at right now, 32.5K margin buying power, 16.25K of cash available for withdrawal. So first, let's just transfer my paycheck. So if we pop over my spending account, I have my paycheck that came in today. So let's just transfer everything over So we'll do that from spending to individual. So you'll notice the individual has like 16.25K of available for withdrawal. So that's cash that can just come out of my brokerage if I want to. And so that should go up by this number essentially. So we'll transfer that over. So this is my full paycheck, as you can see. All right, taking a minute here. Cool, that went through. So if we check, yeah, the cash available for withdrawal actually went up by that amount, right? And then what's going to happen now is that I'm going to invest it. So yeah, you'll see that this number popped up as well too from where it was. And yeah, as far as what I'll invest, I'll start by the growth side of the portfolio as usual. So if we pop over to Qualtrim here from Joseph Carlson, and love this tool as I've mentioned before, and I'll link it in the description. Let's see here. So it's like, yeah, normally I check the 200-day moving average or whatnot. But given the dip that we had last week, I want to check against that really and invest based on that dip. So yeah, so since last week, so yeah, the last few weeks I've been investing in Costco, but actually Costco has fared pretty well on the dip. So it's kind of weeks like that week that I'm happy I'm in Costco, because Costco I've seen like tends to kind of move opposite of like when there's kind of big dips like that. So yeah, I guess people kind of see it as more of a store of value in cases like that. So yeah, Google, Costco are kind of running high. QQM recovered from the dip. So yeah, I'm looking at like two different ones today. So I think I might do some Hood since that dropped like nearly 4%. And I still believe in Hood story, and I think it's still doing well. I know it's been running super hot this year, but yeah, I think their numbers will just kind of keep getting better and better. Let's just pop over to annually and check their numbers. So yeah, their cash flows have been uneven, but I'm sure that's going to even out as they keep growing. Yeah, the cash on hand keeps growing. The revenue like keeps growing a lot when you look at it. So it's growing like 47% a year, which is crazy. Yeah, cash flow obviously is like still very choppy, but I think that will even out over time, and that's what I'm betting on. Yeah, so yeah, I think I'm going to do Hood. So $1,000 in Hood, and I think just $1,000 in SCHD. So SCHD was down last week along with everything else. But yeah, SCHD is almost like, I don't know, the stabilizer of my growth side of things. So it won't grow as much as the others, but I feel like also in like downturns, it does really well. So like when I think back to 2022, SCHD held up really well. So I think the market was down 22% and SCHD was down like 5%, and I think that's not even factoring its dividend or whatnot. So yeah, I think that'll be a good one. So yeah, let's do that. So let's find Hood over here, just throw in another $1,000. So yeah, you'll notice that the buying power here went up as well too from where it was for 32K. So this got added basically the double of what I put in, right? So yeah, I'll put $1,000 here, buy some more Hood. Cool. And then let's pop back over. Let's go to SCHD. So do $1,000 in SCHD. That cool. All right, so that covers the growth side of things. And then what's it called? Let's bring up the calculator here. How much did I transfer over? 5431. 5431.59 minus 2,000. So I have this much to invest into the high yield side today. So yeah, so for the high yield side, so I know I've been doing Alti for the last little while. But I think, like, as I mentioned in the last video, I'm debating between Alti and WPAY essentially for when I get my like 15.5K annual bonus at the end of the month. So yeah, I think like what I'll do today is actually just take a position in WPAY just to kind of have that in the account and have some skin in the game now that its margin maintenance has dropped down. So if we pop to WPAY, like last week, or was it the week before, its margin maintenance dropped to 30% from 100%. So Robinhood typically, since this is a new fund from last month, the margin maintenance starts at 100, but then after like 30 days or so, then it drops to what its normal amount should be. So this is a little bit higher than my normal ones. Like most of my funds are 25%. But yeah, we'll do WPAY because yeah, I think what's nice about this is that, yeah, so it uses leverage swap agreements, right? It doesn't use options income. And yeah, so that's what so it depends highly on like the gains that the stock does that week. My one reticence with WPAY and like just the weekly pay stuff in general is that like I'm very curious how it's going to do in like more like sustained down markets. Like if they don't really have gains to pay out, how does that work out? Does that just become like return of capital at that point, which works tax wise for me, so I don't mind. But yeah, that's my one question there. But what's nice with these is that you do have uncapped capital gains, right? Or uncapped gains given that leverage, and then also that they're not doing any options income that's covered calls that are capping your gains, right? So yeah, that's why I want to do WPAY. And so far its average payments have been nice. So like I just did a quick thing on ChatGPT here to get its numbers so far. So really it is on average paying 0.0759 times 52. That's an average weekly payment. If we divide that by its current price, 53.03. So yeah, it's averaging if we do times 100 here. So it's averaging a 69% dividend, which is pretty good. Yeah, let's do that. So how much is it that I had? 3431.59 and do that. Bye. Awesome. So that's everything's invested. So now you can kind of see that my buying power dropped basically by 5,400 down to 37,931, and then half of that cash that I put in is basically available. So like I put in 5.4K, and then after like I invested all of it. So how that works is that they only give you half of that as available for withdrawal, right? So that's one thing that's important to note, is that if you're ever doing this strategy, is that not your full amount one-to-one will be available for withdrawal, right? That because you got to think that like Robin has to keep collateral and kind of let you take out like a certain amount. So they basically keep half and let you withdraw half essentially. So how it works in my case is that I did have like already a buffer of cash and margin. That's why I'm not like investing this full amount of buying power. So that way I do have that buffer that I can kind of like withdraw a bit more than my expenses are, right? And that also just kind of gets replenished by dividends and stuff every week. So yeah, and then also like if you want to see how all of these numbers vary, if you check out my last video, I'll link it up top here. I kind of really show that clearly how these numbers evolve as I kind of go through all the phases from today. So yeah, now that that is done, the last thing we'll have to do is the fun thing of updating my spreadsheet. I honestly really love doing it. It's such a stupid thing, but yeah, just love updating those numbers. So yeah, so SCHD, we'll just grab these numbers here. So SCHD, and then its average is 25.94. That's gone up a bit since the SCHD has been up. And then Hood is at 36 and 106.83. So this has definitely gone up from last time. I was under 100, but still a good average cost price given that I invested when it was lower. And then for WPAY, where are you? So 64 shares. And yeah, so actually for WPAY, so what I'll have to do, I'll actually have to like update this spreadsheet live here. So how I typically add stuff, and this will be useful for whenever I get this out. Sorry, that's been a bit delayed given the YouTube strike stuff I've had to deal with. But so like if I wanted to add something, I'd like add a row below here. I'd basically copy WPAY or XPay here. And I would switch this to WPAY, and then it should automatically grab stuff here because this is using the Google Finance stuff. And then I'll just ask you to zero these out and then zero these out because I haven't received any dividends yet. And then also one thing I need to do is I'll update the CAGR another time, but the important thing is the dividend here. So yeah, like I calculated here through ChatGPT. This is the only thing I use AI for generally. I don't use it for like thumbnails or anything like that. I just use it as basically my assistant for some of this stuff to speed up some of the calculations. So the average here is 70.59. If we put that over a year, so 36 point, let's say 71. That's what we'll call it. So that will be the yearly dividend here. This is what that column's for. And so that's the average. So yeah, 68. So what's nice is that like once I put in the numbers, I'll kind of get the rough estimates of what I'll get, right? So that's how I get my numbers there. And then yeah, also like the margin maintenance here is a bit different. So put this to 30%, so it calculates that properly. And yeah, let's do that. And then yeah, so 64, and then its average is 53.02. Cool. So that's my WPAY position started. So yeah, you'll see here. So what I'll be making in monthly income with that starting investment is $198, which is pretty nice. So yeah, that's the spreadsheet updated. So I need to update the margin number here as well, given that. So because I invested stuff like that basically, or actually wait, no, that, yeah, should be the same actually. Yeah, that should be the same. This will change once I start paying the bills in a moment here, and I'll have to update that. But yeah, so yeah, you'll see here is that, so yeah, basically with that investment, my market value goes up here, right? And this will stay the same. So even if I take money out on margin, this value stays the same, and this is the value that keeps compounding, right? So yeah, right now I have like 148K in growth and then 128K in margin, or in income, sorry. And this is what's providing the yield, like all this that's invested into the high yield stuff, and then my growth stuff will just keep compounding. So that just keeps growing in the background and providing the capital appreciation, which is why I'm not as worried about the NAV erosion stuff, because I have this part of my portfolio providing that capital appreciation. So yeah, now for the bills. So if we pop over to my monthly tracking stuff here. So we're in October here in column R. And so I have a couple bills. So like these are in like the orange bills today. So yeah, like I've mentioned in other videos, I'm not going to go through like the different websites and pay it like I did in those first videos, just to save on time. But I will just transfer this money over to the spending account, and basically like after the video, just go over and pull in those payments essentially. So yeah, so there's like $338 going to my Amazon credit card. I use that because I just use Amazon a lot, and honestly I should invest in Amazon for that reason. Reinvest in it. I used to, and they pulled out when market got choppy in 2022 and just did ETFs. But I'll probably have to do that sometime soon when there's a decent dip. But yeah, so Amazon, $338. And yeah, what's nice with that, I get 5% cash back on any Amazon purchases, and Whole Foods as well. So I use those quite a bit. I'm just going to put $300 towards my HELOC. Like I mentioned, given the Japan trip that happened and how like the expenses have been running high, I'm just pulling back on the HELOC payments, like how I was doing like extra payments in a couple months ago. So I'm just kind of doing the minimum and then some, just to make room for this big one that's coming up next week, as far as just all the purchases that related to the trip and my credit card. So yeah, and then yeah, that's my other BOA card, $320. And yeah, the big one, this I won't be paying today just because this is due next week. But this is the big boy from basically a lot of my trip expenses from Japan. And then also just like auto insurance, which is $144 here. So yeah, let's just transfer those over. Yeah, we'll just pop over to spending. And so individual, you can see that I have like 21K available for withdrawal for cash. So basically I'm just gonna be taking cash out of there and transferring it to here. And then that'll be withdrawn for bills. So $338.96. So this will be the Chase payment. So just transfer that over. Cool. And then $300 for the HELOC. Man, this is a slow transfer today. And then $300 for, not 3,000, 300 for the HELOC. Yeah, 300. Interesting that this went down higher than I thought. Oh, maybe it just didn't refresh. That would make sense. It just didn't refresh properly. So it wasn't actually 21,000. Yeah, makes sense. Because like before I started at 16.2K, and then that only went up by half. So it was like 18,000. So yeah, $300 for the HELOC. We'll transfer that over. Actually, wait, sorry. This will just go directly to the HELOC account. So yeah, just transfer that over. Got to approve stuff. Sorry. Yes, it's me. Okay. So that's the HELOC covered. And then $320 for the BOA account. Spending, view transfer, cool. And last one is the car insurance, so $144.43. So from individual to spending, $144.43. Cool. Great. So that's pretty much all the bills there. So we're good. Yeah, next week, this big chonker's coming out. And then, yeah, my mortgage at the end of the month here. So those are the last two bills left. And then now that the full paycheck's invested, I can do this. Just love doing everything on the sheet. So yeah, that's how it's looking. We're good. And yeah, after all that, if we refresh, so yeah, after all those, the full investment and the withdrawing for bills, my buying power actually went up like roughly 3K from what we started with. And then my margin used went up because of all the bills that came out. And then my cash available for withdrawal actually went up because I didn't use the full amount of like what was available for withdrawal, right? So I started at 6.2K, and this is went up 1.2K just after the bills. So yeah, again, if you want to see like in detail how these numbers fluctuate, definitely check out the last Paycheck investing video. I go over that pretty neatly. And then just the last thing that I'll want to update here on the sheet is just take that margin number and here, and then also my margin total. So now this is like the new number that I could fully take margin out on if I wanted to, is 170. So this has gone up. So yeah, these numbers should exactly match what's in Robinhood. So yeah, with all that, my margin buffer, my equity is back up just slightly over 50%. My margin buffer for the net portfolio value, so for this value, is 49.27%. And then the full portfolio value, the market value here, like if this dropped by 24.67%, then I would hit a margin call. So Still like lower than I'd probably like, but this is going to go up with like that big bonus payment at the end of the month. It would have to be a crazy drop down in like a day or like over a month for that to happen. So there's like stuff I can do in the meantime to help secure against that, worst comes to worst. But yeah, so yeah, good buffer overall on the portfolio. And yeah, that's the video. So as usual, you can always follow me on Blossom. This stuff is becoming more important than normal given the YouTube strike stuff. So you can kind of keep in touch with stuff like when I can't post on YouTube apart from comments. Yeah, you can follow my trades here. Today it's actually fast. So yeah, you can see my hood stuff came in, my SCHD. So all the trades that I did today. Just missing the WPAY one for some reason. But yeah, Blossom's great for that. You can kind of fully transparently see everything. And then if you want to see stuff even more transparently, you can see my Snowball Analytics page as well. Yeah, in the description, you'll have links to both this. And yeah, you can see all my stuff, like how stuff is broken down. Yeah, the different pies, like all my holdings here with the real numbers. So yeah, as usual, love being transparent with everything. So you can kind of see my full numbers there, dividends, how that's looking. Right now stuff is off because the transition between like the weekly for Misty and Nvidia and all that. So hopefully that evens out because this is not accurate. I'll get 17K. So yeah, hopefully that irons out before the end of the week. You can see all my transactions, my buys, all that good stuff. So yeah, and then also like one last word too. So as I mentioned at the beginning of the video, my last week's video got taken down, as you may have seen for people that were following closely. Yeah, it was taken down as harmful and dangerous content, supposedly. So given that I had a warning a couple weeks back, which I appealed and got rejected as well by an AI response, and then also did the training. But yeah, got a strike, my first strike. So that means that my video was taken down, and then also they gave me a ban for like a week where I can't post, I can't do anything. So yeah, really annoying because yeah, it just seems like I got tripped up in their like faulty automated AI flagging system that they have. And yeah, seems like a lot of other YouTubers have been getting tripped up on it. Like I just saw even today, for example, I saw Dividend Nomad got hit. Eugene Vasquez got hit a couple weeks ago as well too. So yeah, just really annoying. Yeah, given all the disclaimers and yeah, I'm just sharing my personal returns and yeah, give tons of disclaimers. So it's kind of just annoying. Yeah, I think I changed like the format of my titles a bit, like, and I left out the portfolio update part, and I think maybe that's the issue. So I think what I'll do here is that I'll be a lot more drier with my titles going forward, just to be safe, because yeah, I don't want to get another strike. That would basically mean, so like if I get another strike here, they'll ban me for 2 weeks from posting, uploading, and whatnot. Then if I get a third strike, then they'll just outright delete my channel. So super annoying, right? So yeah, I got my one in September here, and then one last week. So yeah, tried to get in touch with like support, with chat, everything, and yeah, just all got like AI responses, AI bots. So super frustrating, but yeah, that did make me realize though that I do need to come up with backup plans here and just how to keep in touch with people. So as I mentioned, Blossom Social is good, but also what I did is start a Discord server. So if you want to more easily keep in touch or just see future videos and things like that, I'll be posting on there, the alternatives and stuff like that. So yeah, if you want to keep in touch, I'll put a link in the description here. It's this one over here. And then also I did create a backup channel just in case. So right now the channel is completely empty. There's nothing on there. But yeah, in case the channel ever gets taken down, worst comes to worst, like I'll have this backup. So you could sub on there if you'd like, just in case. But yeah, I'm going to do my best to not get this channel taken down because yeah, I did a lot already to build this up, like just with the number of subscribers already in 2 months and then monetization and all that. So yeah. I'll tread more carefully with the next few ones and just be careful with the titles and stuff. So yeah, just wanted to give a little update there. As far as the next video, yeah, it'll be like really soon just because of all the backlog of stuff given the ban. So tomorrow on Sunday, you'll get the next portfolio update. So that will cover this week's portfolio performance and the dividends that I received and any news worth sharing from the market and for me as far as like thinking. If you got some value out of this and you're excited to follow future portfolio updates, like and subscribe, and I'll catch you in the next one. Peace.